Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, June 26th, and we just got one economic news, but it is a big economic news release. We got the GDP final revision for the first quarter of this year. Last revision was last month, and it came in at 2.4%, and the forecast was basically to stay at 2.4%. And here's the kicker. Came at 1.8%. Huge drop in the GDP. The economy grew much, much slower than what they originally anticipated. So now we'll just jump over to the headline news. And stock market's up. Dow is actually up over 100 so far this morning. Now, why is that? Because typically bad news would, you know, market would be crashing. But I think a lot of it has to do with, the whole concern of the quantitative easing, the tapering, that maybe it might be too soon. This lower number may convince the Fed to keep with their purchases to keep the quantitative easing a little bit longer. So with that, unfortunately, sometimes bad news is probably going to be. It's not going to be a logical market because of the implications of quantitative easing. So they're going to look at bad news as possibly good news in some cases, the stock market. So be leery of that. Now we'll jump over see how the bond market is kind of reacting to the news and see what interest rates are at. So yes, so we end up downwards transaction, but we did start the day higher, and today we actually start up the day higher again. We're starting up at um, the upper edge of the ceiling. And so for today, we're actually up about 80 basis points so far this morning. Now, something else you may notice is that we changed coupons from the 3% to the 3.5%. This just reflects more directly to where the secondary market is utilizing for interest rates and have a better reflection of the interest rates. So that's the reason why we changed coupons from 3.5 to 4. You'll see sometimes in there as well. But right now we're up about 80 basis points from yesterday. So good news there, and we'll have to kind of keep an eye on this, see if it's a trend. Where we're going to have improvement. We could see it come down a little bit just to keep uh, the the opening gap to solidify the opening gap. But as you can see, the last, yesterday and today, we started higher than where we left off the day before. So that's a good sign, and hopefully that again, that we continue seeing that because that will drive the pattern or create a pattern of upward trend, which will help out interest rates. So interest rates showed improvement today versus what we had yesterday. All right, folks. Well, thanks a lot for watching, and we'll see you guys tomorrow. And good news, rates have improved a little bit more today. Take care.